Hello guys, and welcome to my YouTube channel once again. So in today's video I'm going to show you how you can apply how to analyze boom and crash market, and we are going to apply the continuation and reversal strategy to analyze the market and find a good entry, and how we can find a good entry for our trades, guys. All right, so you follow me as we analyze together, guys. Meanwhile, if you are watching my video for the first time, please click on the subscribe button to join us and help us grow. And also like this video. At the end of this video, I want to see your thoughts in the comment section, guys. I want to see your thoughts in the comment section so that I can know what to create for you guys. All right, guys. So let's start. First thing I do is to come to a higher time frame like this. Then when you get to a higher time frame, there are things you need to notice, which I would want to show you guys. There's one strategy you can use to trade even on the 1 minute time frame, that is to trade volatility pairs on 1 minute time frame. And that strategy is some I'm not ready to show you in this video. This is just for boom and crash today, boom 300. I'm talking about the rejection zones. See these rejection zones, guys. Each time market gets to this zone, there's always a rejection. Most likely a rejection will happen. This happens when the market is actually consolidating. So on the 1 minute time frame for volatility pairs, if you find this kind of zone and you see the market has gotten to that zone, watch out. Just watch out. Maybe on the 1 minute time frame or 5 minutes time frame, there will likely be a kind of a reversal to where the market came from. So this is what people use to trade, resistance and support. If you want to trace resistance and support on the 1 minute time frame or 5 minute time frame, on volatility pairs, it will really help you, knowing fully well once market gets to this zone, there's a very high chance it's going to reverse to the downside. So you can use this to scalp. This is something that is happening here. You can see it is even applicable on the daily time frame too. So you can still use it to make some money in the daily time frame too. For example, you will consider here, I've marked this zone already. If you go down to the 15 minutes time frame, you will see opportunities that would have given you money. Let's go to the 15 minutes time frame. You can see this is the zone. So each time market gets to this zone, it rejects. So you always find an entry. Sorry, yes, a confirmation to enter the trade. You always find that kind of confirmation here on this time frame. You see, each time market gets to the zone, it sells to the downside. This is massive money, guys. So if you can find this zone on the 15 minutes time frame or 5 minutes time frame on volatility pairs, it will help you, make some good profits. All right, so let that zone be there first. I just wanted to bring a little tip. All right, so now how are we going to analyze this chart at this point? We can see the market is actually buying. The market is actually bullish. Then we have something like this. We have this kind of a structure right here. You can see at this point the market was creating some lower highs and lower lows, but the market, is still creating that lower highs and lower lows. Then we have this at this point. We have this. So what is actually going to happen here is this. There's a very high chance the market is going to break out of this zone. There's a very high chance the market can break out of this zone, goes above this weak block, this weak zone. I don't mean, I mean like weak candlestick wicks. If it can go above this zone, there's a very high chance it's going to continue buying to the upside. All right, so that's what is going to be possible. Mind you, we are on the daily time frame. Just take note of that. We are on the daily time frame, and this is a kind of a support zone here too. You can see market got to this zone, created a kind of a double bottom, and it's buying to the upside at this point now. Currently, it's buying to the upside. All right, so let's go to the 4-hourly time frame, because at this point we can't really get something to do to trade at this point. Let's go to the 4-hourly time frame, guys. Please pardon my voice. I'm catching some cold right now. All right, so you can see this on the 4-hourly time frame. This is the weak block which I marked on the daily time frame. You can see this zone right here. You can see how the market rejected on getting to this zone. See, you get some entries here. Look at this one. There's a nice entry at this point with this rejection candlestick. This one here again. This one here again. All right, so now you see that there were so many opportunities at this point, because from here you can see the market gave us this opportunity to sell. Market gave us opportunity to sell. There was a breakout. One moment. There was a breakout here, and market broke through that zone too, because there's a zone around here. You can see market bought from here, bought from here, bought, tried to buy from here, sold from here, bought from here, and also tried to buy again. So this is a zone. Market came and broke through it. Then you can get an entry at this point, but you have to go to a lower time frame to get a good entry. Then market sold. Even if you target just this low here, you make some reasonable profit. But if you have this trend line like what I've drawn in the higher time frame, like I used to tell you, if you have this trend line already, you know where the market is actually heading to. You'll be targeting this particular trend line, gets here before buying back to the upside, so you can hold such a trade. And you should understand that boom 300 is very volatile. If you can get a good entry for boom 300, you will make massive profit within a very short time. It's very, very volatile now. Before, it used to be less volatile. Even if the minimum loss size for boom 300 is just 1.0, and 1.0 will require a margin of about I think should be about $31 or so, about $31. So let's say you enter the trade at that point, you only to get to this point, just this support here, over $120. Then imagine if you can hold it to this to get to the trend line, then you're making over $350, over $370. So you're having a very good entry on boom 300 will give you massive profit. But if you have a very wrong entry, if you get a bad entry for boom 300, it can wipe your profit, your whole account, because of how volatile it is. One spike can finish your whole account if you have a very small account to trade it, guys. All right, so you can see when we had the breakout and market had to sell down to this trend line and getting back to this point. Remember what I told you in my previous video, where market created a high. There's a video I posted recently about the channel and flag pattern highs, sorry, support and resistance. You can see market on getting back to this support zone. This is the highest point on this particular pair. And this pattern, you see it started selling back to the downside, got to this support zone here, then bought again back to this zone, then sold back to the downside. So there are always opportunities. We can always get our trades. One moment, guys. And we can also measure the length of that movement, the distance the market moved to get to that channel from here to here. Then if you drag it down, you can see it's the same thing like what I've been showing you in my previous videos. You can see the same distance, almost the same distance from breakout point to where it started reversing is equal to where market came from before it got to this pattern. So this is a valid setup, very nice setup, guys. And then while the market has already formed that, we still have another opportunity here. We still have another opportunity. Like right now, you can see what the market did here. Market did this and it broke out. Then for this one, the pattern the market has formed will be this, something like this. I don't know how they call this. I think this should be the triangle or whatever pattern. You can see the market broke out of it. Got to this support. Now is buying. The target will be this resistance zone. The target is this resistance zone, guys, to buy into this resistance zone. And you can also, in that same manner, notice that there's another pattern right here created by the market, but this pattern will be more visible on the lower time frame, because if you duplicate this line here and put it somewhere here, you see, you can see the breakout and the retest that happened there, guys. You can see the breakout and retest that happened there. So you make some profits there too, guys. You make some profit because there was a breakout at this point. One moment. There's a breakout at this point. Market came back to retest this zone, this breakout, this level, and it bought up to the upside. Now that zone, you see, like I used to tell you, marking out your zones on a higher time frame will really help you. What's wrong with this thing? Doesn't want to be deleted. Okay, let it remain there anyway. Like, let me get moment, guys. No, this thing is misbehaving. You see, market bought from this zone. So on coming back to retest, it also retested that same zone again. You see the buys to the upside. Market bought to the upside after retesting, and it is still buying. I expect the market to get to this high here, so you can still make some good profit even still on this 4 hourly time frame or this setup now. All right, so now let's go down to the 1 hourly time frame. There is something I will still come back to show you between the daily time frame and the 15 minutes time frame. All right, so on the 1 hourly time frame, you can see the retest. You can see it's a very proper retest and it's buying nicely to the upside. So what I will expect, the market is actually creating higher highs and higher lows now at this point. So if you want to get an entry for this particular pair, you need to wait for another pullback. You need to wait for a pullback to this zone here, because it's a zone around here. The market has to come back to retest this zone, then you can enter a trade nicely and buy to the upside, guys. The market would want to come back because there's actually another key level somewhere here which the market might possibly react to. If it reacts and then starts selling to the downside, if it starts selling to the downside, then there's a very high chance the market would want to come and start buying again from this zone. And if it comes here and gives you confirmation, you can enter a buy trade. And if you're catching the spikes above this level towards the target, should be this particular high here, this trend line at this point here, then you make some good profits, guys. This thing is very simple. It's as simple as that. Imagine even if you just enter a trade, the market comes back to this zone, you enter a trade here, you enter a trade here, and your target is where? The target is somewhere here, over $200. You know, that's one thing I like about boom 300. It's very volatile, it gives you massive profit, but it's very dangerous. Just know when to enter. You need to know when to enter the market. If you get a good entry, you're safe, but a bad entry is a disaster. It can wipe the whole of your account, guys. All right, so you can see. Then if we go down to the 15 minutes time frame, if we go down to the 15 minutes time frame, let's see what we can get there. You can see the massive buys. See the massive buys to the upside on the 15 minutes time frame. You can see it here. All right, so you can see the market is really moving as I told you, and based on the structure the market is forming here on this 15 minutes time frame, there's a chance it might want to reverse on getting to this zone here. So if it reverses, then you pick an entry and you sell. I know before you see this video, the market must have played out, but you can be following this kind of approach. It will really help you. Once you see the market starting to consolidate as it approaches a zone, just expect it to possibly break out, like what happened here. And market getting to this zone, you see the kind of movement it started giving, started consolidating, creating this was a kind of impulsive correction here, then broke out of a trend that was, there's a little trend at this point. It broke out, came back to retest this zone and sold massively to the downside. So you can even take this trade at this point, selling massively to this particular previous zone that was broken out, market broke out from. Then what did the market do again, guys? You see it started buying, then started creating another a kind of impulsive correction, you see, and it broke out of it, did a little one candlestick retest and bought massively to the upside. All right, so the next thing I want to show you guys is how you would have gotten an entry today using the daily candlestick strategy. The daily candlestick strategy. Remember, if you are watching my video for the first time, guys, click on the subscribe button and turn on your notification bell, because I drop values regularly, guys. I drop values regularly. And also like this video, guys. I believe you've gotten some value from it. Like it and share your thoughts in the comment section. All right, so let's go back to the daily time frame. 1 minute, guys. All right, on the daily time frame, let me take out these drawings that are here already, so that the chart can be neat. 1 minute, guys. Let me just do this quickly. Let me pause the video and remove these drawings, then we go. All right, guys, so if you can remember, there's a strategy I shared with you guys about the daily time frame, daily candlestick, previous days daily candlestick strategy, something like that, when you combine it with a 15 minutes time frame to get an entry to trade and catch massive moves in the market. All right, so looking at this particular chart, you can see that the previous 2 days candlestick, which is this bearish candlestick here, on getting to this zone, it rejected this zone and bought to the upside. That's what we got this week here. Then yesterday's candlestick closed with this closed bullish, but the body of this bullish candlestick was very small, as you can see right here, was small and didn't even close below the close of the oh sorry, it didn't go below the previous day's close here. You can see, so they are the same level. So now I told you you can just place a horizontal line like this to mark the close of like yesterday's candlestick. You put it here, then you wait to see a kind of a retest. You want to see the market, the current day's candlestick, it has to go above it, then come back to retest, then from there you get an entry and buy to the upside. So this thing will play out. I'm showing you how that you can also use it to trade this particular spikes that is happening here today on this boom 300. So let's go to the 15 minutes time frame, guys. All right, so on the 15 minutes time frame, there's a setup right here. Let's find where we had that this thing. The previous day closed. This is where the previous day closed. This is where the current day started. You see, this is where the current day started. Then the previous day, then we'll have to put the this thing here. The horizontal line has to be is already actually around this point. So you can see there was a breakout, and we can see our continuation strategy very visible here too. You can see, guys, you can see this. Duplicate this and position right here, guys. You can see the continuation trading strategy. And what happened? You can see that the market broke out of this trend line. Market broke out of this previous days, this blue line which used to mark the previous day's close, and also broke through this resistance line, resistive trend line here. It went up a little, reacted to this zone. This is a reaction. You know, this market was selling from this point previously. That's why we have this bearish candlestick coming down here. It did a little retest, then bought massively to the upside. So even from here, you can catch all these spikes. If you had known this, you could have cut all these spikes up to this point, and you make some good money. With the minimum lot size, you make about $87. With minimum lot size, you make about $87, guys. So you can see you can always combine these strategies to make maximum profit. You can always combine these strategies. You know, you combine them. You don't just learn a strategy and trade away. You modify a strategy by applying new things you get from videos like this, and it will help you excel, guys. This video is already too long, guys. So I would like to end it here. Meanwhile, subscribe to my YouTube channel if you've not done that yet. There's a link in the description of this video. It takes you to my Telegram channel. You get there, you find my direct contact. If you need a one-on-one mentorship, then you can contact me through there. Then you can stay on the Telegram channel because I'll be dropping good information there on a regular basis that will help you succeed in your trading career. All right, guys. So till my next video, stay blessed and peace out.